November, and if their customers are not happy with what they do, they can go down the road and get a better deal.
Meanwhile, retailers are optimistic that the cut will bring the struggling retail market out of the doldrums. The drop of 0.25% will save about $50 a month on a $300,000 home loan. Now, despite the relative strength of our banking sector, there are still calls for increased competition, especially when it comes to their dominance in the mortgage markets. The Mortgage and Finance Association is calling for an overhaul and wants the federal government to provide strong mortgage funding for non-bank competitors, a model similar to that of Canada's, and one that could help spread risk among the overall pool of Australian lenders should the global financial situation worsen. Now, for more, we're joined by Phil Naylor from the MFAA. Phil, thanks very much for coming in. Look, it's I suppose it's a debate that does come around fairly regularly, and one we saw a lot coming out of the global financial crisis. Look, how much is there a need, if you like, for greater competition within the banking space?
Well, pretty well every commentator you talk to, including the Treasurer, keep talking about the bank's doing this and the bank's doing that. So clearly there's not enough competition and not enough competition pressures in the market. So we're saying the problem that's causing that is that there is lack of access to competitively priced funding. That's the banks are complaining that their wholesale funding costs are high, which they are. And the smaller banks and the non-banks are saying that we just can't get access to competitively priced funds. So you can solve those two problems by having a mechanism which gives all banks access to lower priced funds, and that puts more competition in the market, gets more lenders back into the market, and you give consumers more choice, and the combination of all those factors will tend to have a downward pressure on rates.
How do you do it, though? I mean, how do you ease that funding, promote, if you like, that funding pool to bring up some of those other non-bank lenders?
Well, look, the federal government has started to do it with its Office of Financial Management over the last couple of years, but whilst that's been welcomed, it's really been a drop in the bucket. And we're trying to encourage the federal government to look at the Canadian system. And in the Canadian system, they pump about $100 billion a year of securitised funds into the market, which both large lenders and small lenders have access to, and it's a very cheap funds, or relatively cheap funds, cheaper than the wholesale funding that our banks access. So it seems to us it solves the two problems. Solves the problem of relatively high-priced funds, but also gives competitors access to those funds.
And do you see some of those non-bank lenders, are they the fifth pillar people talked about? You know, John Simon talked about it, the government had talked about it, promoting the building societies and these sorts of institutions. Are they the key to creating more competition?
Well, the fifth pillar, as the Treasurer talked about it, is mainly the credit unions and building societies, and they've done a reasonable job in a niche market in the economy. But what we're saying, we really need to get the non-bank lenders back into the market as they were pre-GFC. They had nearly 15% of the market, and that put a lot of pressure on the market, and generally good pressure. At the moment, they've got 1% of the market, and they need to have access to those funds to give consumers choice, but also to put pressure on the other lenders.
Well, the big four banks, I mean, not surprisingly, are asked about this fairly regularly, and maybe as equally unsurprisingly, they say, look, there's plenty of competition. There's four of us here. You know, we're competing amongst ourselves. You just have to look at deposit rates, deposit interest rates and so forth to see that there is competition at work within the space here in Australia.
There is competition between the four majors, but not over the whole market, and that's not in the best interest of consumers. And in fact, that competition between the four majors is not really working because they're gradually increasing their market share. You would argue if there was true competition, they would be losing some of their market share to other competitors.
Was it a worry then when you saw things like Bank West taking over, St George taking over as well, which sort of further, if you like, concentrated the market here in Australia?
Well, yeah, concentration of the market is not good in a general sense. We understand that those things probably had to happen because of the circumstance at the time. But we're really saying to the government, you've done a lot to sort of help the big end of town in making sure that they're stable and guaranteed. You really have to ensure that the whole market is adequately funded. And it's a bonus for the government too. The government makes money out of this. Investors make money out of it. The securitised investors make money out of it, and consumers make money out of it in terms of low rates and a better choice of lenders and products.
Is there a thinking as well? It's good to have more of a diversified space, particularly when you see some of these sort of globally systemic shocks like we saw in the GFC. If you have a too concentrated, if one falls over, a couple falls over, you're in a little bit of trouble. Whereas if you can spread it to some degree, you might be safeguarding a little bit against those shocks.
Well, I think we've got the best example during the GFC. the American system just fell over.
Yeah.
The Canadian system went along without missing a beat. The Australian securitised market disappeared. Canadian system went along without missing a beat. So there's got to be a message in that. And what we're really saying to the government, have a look at the Canadian system, really run the rule over it and see what are the good things out of that system that can work in Australia. And we think there are many.
All right, look, Phil Naylor, appreciate you coming in today. Thanks a lot.
Pleasure.
Now, Finance Minister Penny Wong has blamed media reports about the unfolding debt crisis in Europe for dragging consumer confidence lower here in Australia. Ms Wong also says Australians are changing their attitude to personal